Welcome to etvFutures.com. Today is Friday, January 4th. I'm Caitlin Sisney with your Commodities Recap. Energy stocks fell on the heels of a worse-than-expected monthly jobs report after hitting the $100 a barrel mark in each of the two previous sessions. Crude in New York fell $1.53 to stand at $97.65 a barrel on the NYMEX. Natural gas for February delivery added 17.1 cents to close at 7.846 per million British thermal units. In the metals complex, gold ended the day with a slight loss but posted a gain of more than $20 on the week. Gold closed at $865.70 an ounce on the NYMEX. Silver ended down 3.8 cents to $15.462 an ounce. Today we're joined by Tom Puckett from KIS Futures. Tom, can you give us your recap of today's action in the commodities market?
Good afternoon, Caitlin. As we close the Friday trade on a short week, New Year's week, we've seen some record trading in both the crude oil as well as some higher prices in the gold. A lot of energy information, a lot of news headlines affecting all the markets. To look at the gold first, we have today traded in the 871.8 down to 857 on the February contract in the futures, actually down about $4 an ounce. But still in high range. Very definitely. We have some strong support in the $855 per ounce price range. And we need to watch to see what happens on those things. The next support lines will be down between about 835 and about 830. So may see some profit taking come in here in the near future, but the look right now on the metals is that basically they're in a bull mode. And it looks like they're going to keep their value, what with the international events, Pakistan, election turmoil in the news here, and things going on. A lot of things are causing the haven of gold to look attractive to a lot of people. Plus, from the speculative side, if a market's rising, a lot of people just try to get on and ride it to higher prices. Silver is also down today, although during the week we've traded in strong range. The March contract around 1540, 1550 range. And though we're down a little bit still, it's in high price range, and we have some strong support between about 1525 up to about 1550. So we're just right there at that support band, and where we go from here will be anybody's guess. If profit taking comes in, I would expect it to be mainly selling rallies and buying dips with again a positive look on it. Another thing driving this, of course, is the currency discussion that goes on between the dollar index and the euro currency index. Dollar is back in the 76.76 range, with the euro at about 147, 148, and they've been running antithetical for some time. The euro's up, usually the dollar's down. The dollar's up, the euro's down. That has maintained and remains a very interesting trade. What the dollar may do in the future, don't really know, although that does make U.S. goods look attractive. It actually may work out to where the euro has not got the attractiveness because of the exchange ratios. The Dow Jones is trading down a little bit today, as is the S&P. Doesn't necessarily indicate a change in the market's strength. I think the markets remain very strong. But again, we're looking for markets that move up and down, and so we see a lot of people entering, as well as funds buying and selling in these markets. On the side of the crude oil, we hit $100 this week on the price of a barrel of crude oil, and we've had a little sell-off. We're right now in the February contract. We're looking at about $97.85, $98 per barrel. Again, strong support in the 93.80, 93.70 range, with another little support line at about 94.55. What will happen there, again, is anybody's guess. Although we've had some news that's come in that has proved to be kind of interesting. OPEC did have a higher output in the month of December, and they're going to discuss next month whether they're going to officially increase production again, which may actually serve to press prices down. Inventory report came out with a much larger decline on the crude oil. We were down by 4 million barrels, whereas the expectation had been 1.7 million, so it was strongly lower. Distillates, that's the heating oil and the diesel, were actually up slightly, about 600,000 barrels, but not a significant move there. The high price of oil at $100, anytime you see big round numbers, there tends to be a reaction in the market, and this may be part of the sell-off we've had, a couple of dollars off of that. could go higher. At the same time, the higher it goes, the more the tendency to want to take profit may move in. Gold also was up a little bit in relation to the jobs data that came in. So, again, a lot of things going on in the economy. I think these markets will continue to be strong. I actually look for higher prices in the metals. I'm not so sure that the crude oil and the correlative markets are going to go higher just because other things may. Natural gas is trading in about 780, 770 range. It's come off some highs. We're getting some cold weather now. We may see a rise in that. And so the gas market and the crude oil market are of great interest to the consumer. A lot of fund interest in those markets. When funds tend to enter a market, they usually tend to buy, although not all the time, and that tends to hold a price. So as we close the week, very active trade this week, very wide swings, and we may see more of the same next week. That's kind of a quick nutshell, kind of a sobering week in a sense, but at the same time it creates new horizons in the trade. Thanks a lot, Caitlin.
Thank you, Tom. That's all for your Commodities Recap. I'm Caitlin Sisney. Join us again later for PM Exchange right here on etvFutures.com.